All right, learners, let's continue with our discussion on sources of finance. As if you remember properly, we did talk of internal sources of finance in retained profits, selling of inventories, you're trying to reduce the level. We talked of selling surplus assets. We talked of owner savings. It's an option that is available to traders and partnerships. So you need to sit down and try to find out which method is proper for you, what are the benefits and what are the disadvantages of it, which one is the best source of for you. So as you're trying to do that, so that you make a proper decision. But if you feel like your need is very high, you need a lot of money, you cannot internally source the money, so you can also try to find out options that are available on external sources of finance. We talked of the bank loans that you can apply with your bank and try to get a loan. Okay, so it's quick, but you still need to pay interest, which might be higher depending on policies of your bank. We talked over you can try to sell your debt. So debt factoring, you get less of what you're supposed to get, but at least you get it faster than the actual time that you do have waited. So you look into it and feel like you can make a decision to say whether it's right for you to get the debt faster or not. We also talked of grants and subsidies from government that you can apply or try to look for grants from the government depending on the venture that you have. Once you feel like that will be enough for your source of finance, then you can do it. We also talked of debentures, long-term loans that are given, a certificate issued maybe for 25 years, 30 years, 20 years. So it's similar to loans. You still have to pay interest at the end of the period. Or if you're a limited public company, you can decide to sell shares. You invite people to buy shares from you, then you can have the money. But if you feel like these sources are not enough for you, or they are not available to you, you cannot manage to get a bank loan, sell a debt or what, there are some alternative sources that also you can have. Okay, we have some alternative sources of capital. We have microfinance, where if you're poor, the banks, traditional banks cannot give you the needed services. So there are agents or companies, firms that have been set to give microfinances to poor people. So there are small loans that are given to them, and usually they don't need collaterals and other stuff. So you need to sit down, approach them and see if you're able to do it. They can give loans of 10,000 kwacha, $10, $100 and what. All they need is just to make sure that you are able to do it. So microfinances are there to help small entrepreneurs, poor entrepreneurs to get the needed fund or sources of their capital. If you don't want to approach the microfinances, then you can do crowdfunding. Okay, that's an option that is available over the internet. You try to raise money from a large number of people, each contributes relatively a small amount. So it's like you invite them. Usually this is done over the internet. So you invite them to come and invest in your business. So you invite people across the globe. You put up your idea and people invest. So they can send up $2, $10, depending on how much you want, what your target or your policy. So people do that over the internet, and you end up raising a lot of money if your business is very good. And one of the advantages is that there's no initial fee paid to the platform. So over the platform, the owners or the administrators will just welcome you, let you put your idea there, and you invite people. If people are investing, so by the end of the program or the period, the owners of the platform will get their percentage. So it might be a 10% or 20%, 15% of what you've collected. So initially, that's a benefit because you don't have to pay initial fee, but you'll be able to pay from what you have managed to get according to the percentage that you've agreed to pay. Okay, so that's crowdfunding is a fast way of raising substantial sum of money, because you invite a lot of people across the globe. Okay, they'll be in their country, you'll be in Malawi, and the investors might be in America, UK, China, or all over the world. They'll sit down over the internet, look into your idea, then they will send the money. Okay, so you can raise a substantial sum of money over that. So it's fast way of doing that. That is if your business is very good. Okay, so if it's a new startup, new idea, you just innovated something, it's new into the business, the market, you can decide to test it. When you put it in the platform, you invite people, so you can have a feel of it to say whether it will work out in the market or not. Okay, so you test your business. If people are investing, people have come forward, then you understand that your business concept is very good. But you find over a period of time people are not investing, or very few people have invested, then you can understand that your business concept is not good, so you have to revise it, or the other way around. And that also will help you to be able to know that. But one of the disadvantages is that people can steal your idea. Okay, by the time you want to raise the money, people could get your idea and do the business on themselves. So you find you can lose your idea because you've invited people before you've started the concept. So that's one of the disadvantages. Even if you're not very good at internet, then you can as well not manage to use this concept. So you need to be very good at internet, know how you can market yourself over the internet. Okay, but that's a source of that's one of the alternative source of capital. So in just revising, you talked of the bank loans. All these are the external source of finance that a business can use. So you need to sit down and try to find out which is the best. Okay, once you have done that, then you have to, because the issue is to make sure that your business is surviving. You don't need to take a source of finance that will kill your business. So you need to sit down properly and try to scrutinize each source and see if it's good for a business or not. Okay, so like I said, you don't have to forget this. Make sure you understand them and apply them. They are very available in the market. They are there. So you just have to sit down and try to understand them properly. So as if you remember from the start, we said source of finance can be grouped into two. One, depending on where the money is coming from. So with its internal or external. So that's a one category of source of finance, internal or external. We've looked into it. We also say that you can categorize the sources of finance depending on the duration of the finance or the source. So on that duration, on that category, we have short-term and long-term finances. Okay, on short-term, we have overdrafts, bank overdrafts. You sit down with your bank. Okay, you look into your account. For example, if there's 3 million from your account, but your need for finances is 5 million, so you can discuss with the bank, and they'll give you an overdraft of 2 million. But quickly, you need to pay it back. Okay, so that's it's not a loan, but you're just getting more money from the bank than that you have in your account. Okay, that's a source of finance in terms of the length. So that's a short-term finance. You have debt factoring, like we've said, it's a short-term. You just look into it and you get it. You've looked into that. Then you also have trade creditors, whereby you delay paying your suppliers. People have supplied things to you, and you agreed to pay them maybe after 2 weeks or 1 week or 1 month. So by the end of that period, you find your cash flow is not that good. You'll not be able to pay the suppliers, so you can delay a bit, okay, so that you can use the money for the other needs of the business. That is good because it gives you the time to use the money. But if your suppliers are not very understanding, they might next time not give you the materials. So you need to first try to understand your suppliers and see if you're not going to lose them if you delay the payment, what consequences will it bring. But trade creditors, that's a short-term source of finance. You can still use it. Okay, so on the long term, we have leasing, hire purchase, loans, debentures, sale of shares. These are long-term finance that you can use. Okay, leasing, it's if you mainly it's done with current and current assets. Okay, fixed assets. Okay, so if you don't have the money to buy the asset, you can just try to lease it. You get it, you use it, and you pay monthly installments. You pay them the money. So by the end of the period, after you've used it, you give it back to the company that you've leased it. So if you want, you can buy it, but usually if you're not very careful, you find the money that you're going to pay by that period of lease, you find it will be even higher than what you would have used to buy the asset. But it depends on your assessment. You can lease it and pay it back, okay? Or you're very in need of the fixed asset. You want to have it as yours, but you don't have the money to pay it at once, so you can hire purchase it. You just pay a deposit, you get the asset, you'll be using it, but monthly you'll be giving back to the company. So by the end of the period, the asset will be yours. So you need to work out, but that's the best way, that if you don't have the whole amount of money at once to buy the product, you can hire purchase it and you'll be paying slowly. Okay, that's a long-term way of financing your asset. You're buying the asset. Then we talked of the loans, we talked of the debentures. Okay, these are long-term. Okay, 1 year, 2 years, 3 years, 5 years, 50 years in terms of debenture. So that's on it. We also talked of shares. You can sell the shares. If you're a public limited company, you can issue new shares, invite people to come and buy, or what you already have in the business, you can sell the rights of owning the business, so you reduce your rights into the business. So issue of shares that are for long term, okay, are not just short term, because you get the money and the people will be in the business for long term. So these are the sources of finance: the short term and long-term finances. We have the internal and the external. So in terms of duration and where the money is coming from, you need to sit down with your accountants, your finance directors. They should scrutinize each method or each source and see whether it will be good for the business or not. Okay, so like I've said, I'm not going to give you notes on this. I want you to take it upon yourself. Once you have understood this, you also need to visit the book and write short notes. That will help you to fully understand what you've watched here. Okay, if I just give you the notes, it'll a bit make you lazy. So I want you to have that as a time where you sit down and also look into it. All right, so those are the sources of finance that we've been talking about. Thank you.